Okay guys, welcome to another video on my YouTube channel, and today we're gonna be discussing another topic, and today's topic is gonna be about multiple time frame analysis. Alright, I'll write it right away. And first thing first, I want you guys to like and subscribe to my channel. It's gonna assist in growing this channel, and also you're gonna be able to get information when I post there, and you're going to be able to utilize them properly and very well. So guys, I want you guys to like first of all, subscribe, and also comment, because I want to see that okay, people are liking what I'm posting, and also probably to you guys can tell me what you want me to discuss about my ideas and my knowledges about forex trading and my trading style. So guys, let's kick up. All right, try put your comment there. Tell me what you want me to videos you want me to make on, so I can know what's best interests you guys. All right, and is on my strategy. If I know about it, all right, and I use it, I'm gonna put it make a video about that to you guys. So first of all, like and subscribe to the channel. Thank you, and thank you. So let's go back to the real video and the new topic for today. Today we're going to be talking about multiple time frame analysis, which is a very key uh, um, topic for a trader, and I think it should be used by everybody. Multiple time frame analysis. Multiple time frame analysis. Good. So this is pretty much, first of all, I want to just tell you about time frames. I know very much you guys know about time frames and how they are, but I just want to know, brush it very well, refresh it to your memory, so as for people that probably don't understand or just new to forex, because this channel is made for. Sorry guys if I'm sounding somehow. I kind of like got an injury in my mouth. I hit my mouth on the it was very on the door. I wanted to turn, I hit my mouth and kind of like caught my mouth, so it's really painful. It's making me like talk it somehow, because I tried not to touch it. If I touch it, it pains me. So that's by the way, guys. So let's go on. First of all, I want to talk about time frames and how they are. I know most of you know about time frames and how they are. Like for example, if we go down to the 1 hour, if we go down to the 1 hour, every candle here you can see here means that it formed within an hour. So out of the 60 minutes that is in an hour, each of these candles formed within an hour. So this one here formed within 1 o'clock to 2 o'clock. This one formed within 2 o'clock to 3 o'clock. This one formed between 3 o'clock to 4 o'clock, and it closes. All right. What that means is that, let's do this very big one. It means that this, for the bullish candle, it opened here for the whole 60 minutes of an hour. It first opened here and shot up and closed here. Alright, let me use another one. This one means right here that it opened here, went up within the 60 minutes, came down, pushed up, and then closed here. I don't know if you guys get me. So that's what it means. And then so on and so forth. If we go to the 4 hour, it means that every candle here formed within 4 hours. So let's say within the 4 hours, that is one, there is 1 hours in the 4 hour candle time frame. So it means that, for example, now this one here, it means that this one opened, it opened here, went up, opened here, went down, came up, came back, and closed here within 4 hours. Right? So within 4 hours, and that happened from 6 a.m. to 10 a.m. and then closed. You get me? So that is it, guys. And same thing and so forth for the daily. It also means the same thing, that it opened and closed for the day. You get me? So that's what it pretty much means, that open and close for the day. This one opened here, went down, came up, came down, and closed there within the 24 hours of the day. So there is 24 of 1 hour candle within the daily candle. So from 12 o'clock a.m., that is in the morning, or when the market opens, which is usually by 10:30, because the Australian session open, the Sydney session open around 10:30 till when the Sydney session closes. That's 24 hours to when the Sydney session opens again. So that's 24 hours. So that's it. I know this information very much. You guys know about it. It's just simply trying just to brush it and because that's what it's about, multiple time frame analysis, right? So it's best we start from explaining what time frames are and how they works and how it works for people that probably not really understand or who are new to forex trading, because my channel is made for both. Yeah, it's very simple that newbie can understand and also a pro can also understand and follow it. That's what I probably much mean. So let's go down to what talk about multiple time frame analysis and how I go about it in my trading style. It's very pretty much simple. In trading, simplicity is key. The simpler it is, it can be, the more better it can be for you. Or when I see people try to make things very complex, it's kind of like, I don't know, it creeps me out sometimes. Like, why do you also want to mind? Forex is very simple, actually, honestly, guys. Before, I used to say it's hard, and people say to me, "Yeah, it's because you don't know that's why it's hard." The truth is that it's simple. If you make it simple in your beginning, it's going to be for you forever. Just follow what I'm saying. It's very simple. So that is it, right, guys. First thing first, this is USD CHF, and I want to tell you how I go about my trading for the house using the multiple time frame analysis. Because this is multiple time frame analysis is about combining different time frames for you to choose your what your trade outcome will be, comparing it from other time frames. Usually starting from the higher to the lower. It's not usually starting from the lower to the higher. It's usually from the higher to the lower, not from the lower to the higher. You get me? So we always start from the higher time frame to the lower time frame, and we judge it based on what we've seen from the higher time frame, because it's been proven that confluences on the higher time frame are tend to always work more than that of the lower time frame. Right? The lower time frame works, but the higher time frames are always more authentic. Let me say a double top on the weekly is likely to hold than that of a double top on the 1 hour. Doesn't mean that the 1 hour doesn't, but it's most authentic on the higher time frame. That's what I mean. So if you can judge your trading from the higher time frame, it's going to show that you're going to probably have a more edge on odds to your favor of coming out profitable in forex. So, guys, first thing first, I usually do is to come to the weekly. I usually visit the monthly once in a while. I don't look at it, and it's always at the end of the month. So weekly, I use the week because I think within the week, I trade within the week, and when the week closes, I look at how the weekly candle closes. But mostly, what I'm trying to say here is that I mostly come to the weekly for two reasons. One, to plot weekly key levels, and two, to look at what kind of candle formation is forming. All right. So when I mean weekly key levels, I think I've explained this in my first video. If you want to really understand it, I think I've explained it how I trade in my first video. So I come here, and guys, listen. If your weekly is giving you problem, or you're not really, let's say, let me start from the 1 hour is not really clear for you, feel free to go to the 4 hour till I get a better view. If the 4 hour is not looking clear for you, feel free to go to the daily. All right. The daily is not looking too clear, feel free to go to the weekly and so on and so forth. So right now you see me on the monthly to draw it, because that's because the weekly is not really looking clear for me. All right. Kind of like I don't really know where to start from to draw the my weekly zones. All right. So you can see it's just complicated. It kind of like confusing me. So I just go to the monthly. I don't do it on the monthly, but I just doing it because the weekly is kind of looking um it's kind of looking somehow, I don't know, not really clear to my eye. So that is why um I move to the monthly. Same thing I do. Sometimes the 1 hour is not looking fine. I take my trades on the 30 minutes and the 50 minutes. If they're not looking clear for me, I will just move up to the 1 hour. I just move up to the 1 hour to see if it's clear there. If it's not clear there, I go to 4 hour and so on and so forth. So guys, first thing I first is I use and I have different tools for drawing these levels. On the weekly, this is the level, this is the tool I use. These two here. So you can see market from here since 2015 came here, rejected it. So it's safe to draw our level from here. All right. Remember, this is the monthly, so you want to make it tiny because on the weekly it's going to be a little bit bigger. Yeah, so that's good enough, and that's all I just wanted to do. Then I just clone it. So first thing on the weekly, this is on the monthly, but it's because the weekly is not clear for me. That's why I call it. The weekly is clear for me. There's no need to come the monthly because I'm a day trader. There's nothing really concern me about the monthly time frame. So I just come to plot key levels. I explain what is key levels, levels that are just in my previous video, and those levels that market tend to react from or react to more often. So as you can see, That is another key level, and I just always clone it so as just to give me the same size. And I come here, and then we can see another key level right about here. Remember in the previous video I talked about marking the most obvious ones first of all before anything else. The most obvious key levels is what you should mark first of all. So these are the most obvious ones. You can see it touched here, it rejected here, came here, touched, pulled up, came here. I'm expecting it's gonna pull back up again. See that it rejected here, held here. Whenever I broke it, stayed above. Whenever I broke here was kind of like messy, but you know, if you check my previous topic, my previous video on key levels, you're gonna see what I talked about that you can always get that perfect. All right, sometimes you don't really get that perfect key levels, and you just have to do what happens there or more often is what you take. All right, so more often the market rejected there and held above or below it, so that is what we take. Sometimes yeah, this area I can like play around and you can see the candles are just very fun itself. So it's safe to still keep it there. So that's it on the weekly. I'm just on the monthly because the weekly was not clear for me. But mostly, most times I'm always is the weekly I start. For all the time I start from the weekly as a day trader, and I'm just there to plot levels. All right, I'm there to plot levels because it is safe for me to say if I look out for candlestick formation, because you cannot just be looking at candlestick formation on the weekly just from anywhere. We just see candle, okay, like here now we see a engulfing candle, we say, oh, it's buying. But meanwhile, it's in a key level, all right, and we are in a kind of like a downtrend. So you can see what happens there now. If we sat down to say, oh, when the weekly candle gave an engulfing, but you can see we are in a key level, the weekly key level. So this is that probably wait for break and retest or some kind of, you get me? Because we cannot just be aiming on this candlesticks from anywhere. We just see a candlesticks anywhere and we begin to capitalize on it. No, it must be on a level, a key level. It must be from an area of interest, a POI, AOI, whatever you guys want to call it. And you can see clearly that this place is an area of interest. So we're going to be interested in trading USD CHF this week very, very well because we're going to expecting bullish moves on USD CHF. All right. So that is it. So first thing, that's what we do, because as we look at here for candlestick levels, candlestick formations, we can save to say we have to look at it from area of interest. Market held here. If you go back, you see it rejected here, held, and so on and so forth. Whenever I got there, it pulled up. You can see he came here around 2023 December, and then January pushed up. See that came back again, gave us, you can see this now, engulfing, gave us an engulfing candle. You can see clearly. So that means this is since August 1, 2, 3, 4, 5. August to September, a whole 1 month, and market will just be here, and then we get a weekly candle that comes, covers the whole, engulfs 1, 2, 3, 4, 5, 5 candles. So first thing first, weekly we look out for, write this down, we look out for candlestick formations, and we plot our key levels too, because it's safe to use candlestick formations when they are in key levels, not when they are in no man's land. All right, so we plot key levels on the weekly, and this is the tool I use this what is it called, rectangle, exactly this color. I use them and have them from different time frames. So on the weekly, where I start my analysis, I draw my um uh, uh, key levels, and I look out for candlestick finish. I'm not looking for trend on the weekly. I'm a day trader. I'm not looking for trend. I'm not following trend. We as a day trader, where I start to look out in trend is from the daily. Because as a day trader, I said to look out from the trend from the daily. I don't know, you get me. So I look out from the trend from the daily. Weekly, I have a problem with that. I just look out for candlesticks there. And then move to the daily. Now on the daily time frame, that is where I start to probably look out for the trend. I start to pay. I'm just looking at the front trend, but I'm not so really concerned about the trend. All right, but I look out for the trend. You get me? And that's when I can now start plotting what is called trend lines. That's why I can now start plotting trend lines. And so guys, so yeah, we can see that in the daily time frame, we can see that market has switched to bear bullish. You can see higher highs, higher high, higher low, sorry, higher low, high, lower low. You can see that, see, came here, all right, then pushed up again. You can, oh God, I think I made a mistake right now. Starting from here, pushed down here, pushed up, came down here, pushed up, came down again, pushed up, and then it's just been ranging here. Alright, then we broke here. So meaning that the trend has changed to a bullish trend. So now I get my um, daily time frame level. This is the one I use for daily time frame. You see that? So if there's any other place again, I'll plot it there, but I just like to look at for the most recent ones. So you can see it here. Let's now get rid of this because we've seen the trend. It's broken the trend. I've been waiting for these things actually for it to break this area so I can look to buy. Because now the trend has changed on USDCHF. So this is the tool I use. And now on the daily, I'm looking out for chart patterns. The only thing I can look out for on the daily is chart patterns. In fact, from the daily is when I start to look out for these common things, candlesticks, chart patterns, trend lines, Fibonacci from the daily. Alright? From there is when I start to look for them. But mostly I'm always as a day trader, I'm mostly always concerned as my current trend, my main trend from the my main trend is usually the 4 hour. The daily is to fulfill all righteous because I can't get rid of the daily because the daily as a day trader I have to look at the daily. What is the daily doing? So I look out for daily for candlesticks formation too. I look out for daily for chart patterns too, and also trend lines and all the other things I can look out for on the rest of the time frame. But my main focus, remember, main focus, you don't see me always on the daily, you always see me mostly on the 4 hour. And then next time you always see me mostly is always on my entry time frame. So I'll always be on the 4 hour. I look at the 1 hour to see my current trend, but the 30 minutes and 15 minutes where there's no way you see me. You see me on the 30 minutes, 4 hour, 30 minutes, 4 hour most times because that is where I take my main trend and my entries from. So mostly I'm always there. Again, the daily is because I need to look at the daily because as a day trader I look at the daily time frame to see how the day closed. What kind of candle did it close? Where did it close at? How did it move? What structure did it break? Because at the end of the day, you want to look at the daily candle. So it's safe to look at the daily candle. So look at this now. You can see that the market sort of made a push broken here. I've been waiting for it to break here. Just this stage, I've been watching it. It's been ranging, so I didn't want to trade here. It's not possible to trade this kind of thing. Candle is choppy, not range, it's choppy. Ranging market is, let me show you what a ranging market looks like. But this is what a ranging market looks like. See, it pulls out, counter, pulls. This is a ranging market. So you can see now it's changed trend. Alright, so that's what I'm looking out for on the day, and it must be in accordance with the trend. So now I come to the 4 hour. The 4 hour is where my main trend is. This is what I define as my main trend, and then we can see it clearly here that the market has changed structure. So you see that we can't trend any of these. Yeah, me. I'm just trying to show you step by step how I follow. You guys to jot it down, write it down, right? So now on the 4 hour is where I call my main trend. Where is that? This is where my main trend is. Alright, so this is where I call my main trend. Let me write it down. Main trend as a day trader. Main trend. This is what I define as my main trend. 4 hour. 4 hour is my main trend. I think let me write it out. Let me write all those things out. Weekly. Candle sticks and kilos. Levels. Daily. Daily. I'm looking out for daily. I'm looking out for chart patterns. Chart patterns. And also, let me say, also on the daily, remember I told you on the day I look at for chart patterns and also look at for candlesticks. You can't ignore candlesticks on the pan, chart pattern. But I'm telling you on the week, that's all. On the week, this is all. If I see chart patterns, good. Alright, but I'm not there to look for chart pattern. I'm there to look at candlesticks. Once the week, and I only come there when the week ends to see how the week ended. Finish. Another during the week, I'm not there. Same thing the daily. By the time I come to the daily is when the daily ends. So let's say today is Sunday. When the day ends, or let's say tomorrow will be a trading day, Monday. If Monday comes to a close, I look at the money to see how the candle closed. During the day, I'm not looking at the candles because the candlestick is still forming. The daily is still going on, so the daily candlestick is still going to be forming. The 4 hour same thing. The only time you see me come to 4 hours is when I know when the 4 hour is going to close because I know the 4 hour closes 6 a.m. Nigerian time. We are the same with London. Us and London at the same time. So when this is 1:47 right now in London, this is also 1:47. It can pass with minutes. Let's say that will be 1:48 or maybe 1:46, but it's just you can't be using minutes for that. So same thing. I know it closes the 4 hour closes 6 a.m., 10 a.m., 2 a.m., 2 p.m. Sorry, in the afternoon, 6 p.m., 10 p.m. Another then it opens and then again 2 a.m. in the early mornings, 6 a.m., so on and so forth, just like a cycle. So that's the only time I know I'll come to the 4 hour to look at how the 4 hour closed. Because already I know what trend the 4 hour is in. So all I'm going to see work how the candle closed to determine my okay what I'm going to be doing, where it's closed, is it above a support level or below it? If it's below it, and if I want to buy, I will tend to say okay, if we can close above it, I'll be okay with that. So that's how I go around my trade. So let's go down to the chart part to the daily. I can also look out for chart patterns. Sorry, one second, candlestick pattern. I'll just put a candlestick. All right, and that's where I also look at. I can also look out for the trend. All right, as a daily type, as a day trader, I also look out for trend. Then on the 4 hour, what I look out for is this is my main trend. This is my main trend. All right, so this is where I'm actually looking out for to know what I'm going to be doing. My main trend as a day trader is my main trend. So I'm looking out for the trend, and then probably if it's an uptrend, I'm looking out for buys. The downtrend, I'm looking out for sells. All right, so that is it. I think I've talked about counter trend, trading counter trends. I think I made a video about that. If I've not, I'll check it out and I'll make a video about that because I also counter trend, but it's not for beginners. It's not a safe way to go. I think you should first of all just be trading casual, like with the trend. Then probably when you become a pro, you cannot counter trade because the skill is quite different. It's not really just a straightforward. All right, you don't. It is how you trade it. There's a psychology to it. There's a skill to it. There's a risk management to it. All right. So, but that's for another video. Just what I'm talking about is following is multiple time frame analysis. That is following the trend. This is how I started. All right. But with time, and I knew how to counter trade, and the skill is quite different because let me just point out one thing for you. One mistake people used to make while counter trading is they tend to want to hold for a long time when they're doing that they're trading against the trend. You're trading against the trend, you should look for a little amount of peace and you're out because you're trading against the trend. So you want to be quickie before it can catch you and say, I got you, training against the trend and hold you accountable. So you want to get in and get out. Yeah, so that's how it is. But that's just one thing to point. There's so many things to point out while doing counter trading. All right, I'll make that in another video. If I've not, I think I made that video. Can't recall, but I'll make it in another video. So let's go back to what we're talking about. So 4 hours where I call my main trend. So I'm looking out for the trend. So you can see right now the trend is bullish. So in this case now, what I'm looking out for is sort of like a pullback. Market can pull back and then boom. Next level target is going to be this trend line. Let me guys. And this trend line it matches with here. Next level target is here. Now this market could just keep pushing upwards. Oh, I wish it could come down from the trend line for us to hop in to the upside. So that is it, guys. And about the 4 hour, and that's how I go to the 4 hour. So now this is my main trend, and then let's go down to the 1 hour. This is the 1 hour is what I call my current trend. 1 hour is what I call my current trend. Is where I look up for what is the current trend right now. And it's really nothing to always worry yourself about because 1 hour, that's why you see me mention the 1 hour when I say times I run throughout, I am do and throw out of. I say the 4 hour and the 30 minutes or the 15 minutes. I didn't mention the 1 hour because most times you notice the 1 hour is just going to be like an expansion of the 4 hour. I know you get me. It's just going to be a bigger scale of the 4 hour. It's always just similar, just that you're going to see it on a larger scale, but it's always going to be, if the 4 hour is uptrend, 1 hour is likely always going to be uptrend most times. Let's say 85% of the time, if the 1 hour, or let's say 90% of the time, if the 4 hour is uptrend, yeah, the 1 hour is going to be uptrend. So I didn't really see much to talk about the 1 hour, because it's always just the larger size of the 4 hour. It's always going to be the same. All right. And remember, guys, always feel free. If you can't understand what's happening on the 4 hour, feel free to go to the daily. If you can't understand the 1 hour, feel free to enter the 4 hours or the 2 hours to clearly understand what happens. I do that very well. It helps me a lot. So I'll just move down to the 30 minute. Now this is where my entry time frame is. Right? This is my entry time frame. So now 30 minutes. Very simple, guys. You can see, very simple. 30 minutes, my entry time frame. My entry time frame. This is my entry time frame. Alright, so simple. This is where I need to enter the trade. So now what am I looking for? I'm looking for simple double tops. My entry criteria are double tops. I use chart patterns and candlesticks formation for my entries. Alright, so what I use, let me write it down. I just like writing these things down. Entries equals chart patterns. Let me just chart CP, chart patterns, and candlestick formation, CF, candlestick formations. All right. So entries, chart patterns, and candlestick formation. So what am I looking out for? I'm looking out for a pullback. In this case now, I'm looking out for a pullback to an area of interest. Remember, at the end of the day, everywhere need an area of interest. So I want even the entries, I want you to reach an area of interest for me to keep on to hopping. And then again, you guys, I want to come down, give me an area of come to an area of interest, which is this area right now. This area, you can see market holding here. Yeah, at this point now, I'll draw a trend line. Alright, so the market can come down here to buy. Alright, so I'm looking for market to come down, then I'll buy around this zone. You can see the trend line, first touch, second touch, the third touch. This market is also, if it can come down, I like it. It can come down or maybe form something right about here, just give me some form of support and then for me to enter, because I like to keep my stop loss below structure. So let's say it comes over there. It's going to be for a buy. My stop loss will be here, and then my profit targets will be right here. I see that's a clear 1:3 risk to reward ratio. Very simple. You can come in, this will be a sweet trade. So you can see how from the weekly down to my entries is up. What I'm looking for right now is uptrend, but it will change. Anyone will change. But what I'm looking for is to buy this market, USD CHF. So guys, watch out for USD CHF. Watch out for USD CHF. We're looking for buys on CHF. But pretty much going to buy because it's been long. The weekly gave us the engulfing candle. The daily gave us a break of trend, 4 hour uptrend. The daily, our entry time frame is showing us bullish. NFP came out. This is actually NFP. This big candle, this bullish candle you saw here is actually NFP, and NFP gave us bullish. So the dollar is actually, and also the dollar is also very strong. We are looking for bullish. All right. So guys, I think that is it to come to an end. I hope you understand this. It's very simple. Just follow these things I wrote down here. It's very simple, very easy. It's not hard. Trading is not hard. Just follow the trend. All right. And be patient. I think I've concluded is to be patient. Follow risk management. Have good technical skills. And that's all. Nothing more. So thank you very much, guys, for staying up to this point. I hope this video is not too long for you guys. Because I just want to make it as brief and as simple as possible. Thank you, and peace out. Bye, guys. See you next week.